afternoon I was trying to see what we were going to do on the S&P, but again it's not really doing that much. Now we have eased from the extreme overbought conditions up there at that 90%. We did have divergence, but we're still pointing lower, although the market isn't going that much lower. So we are below the weekly and the daily pivot. Your daily pivot today is 41.69. All of the pivot point analysis has been posted onto the group chat, so you can look in amongst yourselves and find out what's between the high, the all-time high here, and what is between the 23.6 fib extension. So 42.18 you're looking at, up to 43.03. There are levels up there. What I've said, I've posted them onto the group. But I'm really looking at the downside now, because this all-time high, no follow-through, although I have to say, I have been saying this now like for a year, but this all-time high posting, close at the high posting, no follow-through. So what can't go up goes down. This is your key level on the downside. You've got this coming in at 41.28 and all these little bits coming in here 41.18. So there is support down at these lower levels. So what I like to do is try and marry up pivot points and Fibonacci extensions and or retracements. So we're in, I think, the retracement zone at the moment. If you look at the short-term fib level, we're coming in at 41.35. That's tying in with the 41.28 to 18. You've got 41.06, which is a little bit longer term, March. We're going through March, April. I don't think there's any point doing the longer term ones. I'll do them for you of a week anyway. Why do I think the S&P is going to go lower? I think it's going to go lower because of the failure swing that we saw up here. Although, with diverging indicators, markets very rarely make that move to the top side and sustain it. And that's what somebody, technical traders, we're all looking for that. So you need to be aware of that. We're down already. We're at 41.53, close to 41.60. We're not down that much, but we're still lower. So now we'll take a look at the Dow and see whether or not we can see anything from that. And yes, we can. Yesterday, the Dow made a new all-time high. And it's done it the same today. The high was 34341. Yesterday's was 34331. So the Dow is actually trying, I think, to find a move, to the top side. But although it's made a new all-time high, we are not seeing any follow-through again, and the daily pivot is at 34200. We're in 34196 already. So you've got to look at this longer term view. It's very, very hard to stand in front of a speeding train. I thought this would hold. I did. It didn't. We went up a little bit further than what we should have. Now that could have been stops coming out. You could see we closed not fantastically on its highs. It closed sort of mid-range. And although we've tried to do it today, where I'm looking, we look like we're failing. Your first key will come if we do actually go down and take out that daily pivot and stay below it. Then we will be looking at the 9-day moving average coming in at 34045 and then 33952. We've got lots of little tops and bottoms and closes around this area. Now this area here is the 23.6 fib of 33867. Now this was its first predicted extension leg higher target. So it's still valid because I like to leave these, I do like to leave these on. But if we do take this out and break down through here, which is 33765, then you're looking at the Dow coming down, and I would think that we would be able to come down further and take out all levels of support and possibly go for that 55-day moving average, which is coming in at 32936. Now, as you know, when I do markets, I always like to look at the Nasdaq. I like the Nasdaq because it gives me an idea of where the stock markets would like to go. And I don't know, I trade the Nasdaq a lot, so I like looking at it. So I'll just pop over and show you that. And this is why I love the Nasdaq. I do. There we go, we make new all-time highs. We can't hold it. We break, we gap lower, we gap down, okay? So because we're gapping down all the time, it tells me that, you know, this market is really looking under pressure. Now, obviously we've gone from overbought to oversold. Obviously, we did see divergence. I'm looking at this so I can just show you a little bit longer term. I can see this coming down to that 55-day moving average. That's coming in at 13,347. I don't see a problem with that one. I then look at 13,304. I'm looking then for this level here, 13,197, and this coming in here at 13,056. Now, this shows a different pattern to the other stock markets, the S&P and the Dow. You can see clearly it's looking at a different picture. Dow makes all-time highs, new all-time highs. NAS doesn't. Now, the NAS has an unhappy knack of leading the market. Okay? I could say it's reversal Thursday for the NAS, but it's been going down all week. Just look at the levels I've given you. Remember that you've got a gap up to here, and the base of that gap comes in at 13,784. The 9-day moving average comes to 13,775. We have to fill that gap. I know it's not looking likely at the minute, but we have to fill that gap to get any sort of bounce back in this market. Okay, well, I hope that's been a bit clear. I will catch you all later. Good luck for this afternoon.